Good afternoon, ladies and gentlemen. It is a great pleasure to be here with you. My name is Dimitris Koutsopoulos, CEO of Deloitte in Greece, and I have the pleasure to moderate a session about a topic that is of great interest. And it has taken on even greater interest during the last few years. And of course, we're not talking about other than the green financing and the ESG criteria. In our discussion today, we are going to focus on the need of having a powerful and resilient economy following the pandemic and the important role that these investments can play in green growth investments made by the private sector. The European Union has committed to become climate neutral by 2050. We have now the Green Deal for sustainable growth that has made the business world turn towards green growth. European Union tries to liberate funds in order to make investments amounting to 1 trillion euros. Our country, through the European Recovery Fund and Resilience Fund, but also through the National Recovery and Resilience Plan, will have the opportunity to ensure this green transition. The implementation of the green energy investments that will be made in Greece, according to Plan Greece 2.0, will allow enterprises to make a successful transition in the new climate-neutral era. And all the investments that are therein included can contribute to this green transition. Major opportunity is also present for the small medium enterprises that constitute the backbone of the Greek economy. These enterprises need to make very rapid actions in order to meet to the current challenges, and at the same time they have to implement some innovative approaches. To start, I have the pleasure to have with us in this session Ms. Eleni Vrettou, Chief Corporate and Investment Banking of Piraeus Bank, Ms. Alexandra Konida, Managing Director, Head of Wholesale Banking of HSBC, Mr. Socrates Lazaridis, CEO of Athens Exchange Group, and Ms. Teresa Farmaki, Co-founder and Managing Partner of Astarte Capital Partners. Before we start, I would like to have a first round of interventions in order to see how each and every one of you perceives ESG and how you incorporate it in your organization. Thank you very much, Dimitris, and thank you very much for the invitation to take part in this panel. I would like to tell you that Piraeus Bank has as a main axis of its strategy sustainable banking that combines transparency as well as environmental sustainability. I would like to remind you that Piraeus Bank was a pioneering in terms of responsible banking in Greece since it shaped, along with 29 other banks, the principles of responsible banking. These principles were later adopted by 190 banks around the world, whereas today Piraeus Bank is the only bank that takes part in the Banking Council. We are also the first bank in Greece that proceeded to the funding of green sustainability projects. Thank you very much. I would like to ask the same question to Ms. Konida. Good afternoon, and thank you very much for the invitation to take part in this panel. In HSBC, the adoption and promotion of ESG principles is the main priority, and we aspire to play a leading role in the funding of sustainable growth and transition to an economy of zero carbon, since we acknowledge that we need to proceed fast in order to deal with climate change. Our strategy is based on 4 axes. The first axis pertains to the transformation of our operations, since you need to start from your own organization, and we have set as an objective zero footprint by 2030. And we expect our suppliers to do the same. And we have also committed to reduce CO2 emissions of the customers' portfolio that we fund according to the principles of the Paris Agreement, that by 2050. At the same time, we have committed to finance investments in green growth, and we have developed investment tools and investment funds that support startups in their effort to develop innovative technologies in sectors like clean energy, natural resources management, and RES for the production of electricity. Thank you very much, Ms. Lazaridis, Athens Exchange Group. Good afternoon, everyone. First of all, I would like to express the great joy I feel to be here, thanks to the initiative taken by the Hellenic American Chamber of Commerce. The Athens Exchange Group plays a dual role. The first tries to mobilize the sum of listed companies in the direction of ESG, and also being a listed company that wishes to abide by the standards that are formed, and wishing also to meet its obligations. We had the luck, thanks to a previous GES, to meet George Serafim, the professor of Harvard Business School, that was awarded, by the way, by the Hellenic American Chamber of Commerce a few years ago in this same room. He made us the honor of being a member of the committee of the Athens Exchange Group. So since 2017, we started this journey, and we developed the guide for the financial information in the context of ESG, that since 2018. Then we developed the index, and now we are looking into the green bonds we would like to issue, but we will say more later. Ms. Farmaki, I apologize for giving you the floor last. Astarte, what does ESG mean for you? I would like to thank you in my turn for the invitation to take part in this panel, and allow me to make a very short introduction about Astarte Capital Partners before I talk about ESG. We are fund managers with our headquarters in London. We have presence in Australia, Canada. We specialize in infrastructure projects, natural resources projects, transportation and real estate. And in Greece, more specifically, the founding members of the company have been operating since 2017 and being co-founders of the EOS Capital Partners, which is one of the major funds investing in small and medium enterprises in Greece and taking part in a Sporos project in the context of circular economy. We have made some important activities. Now, for us, sustainability and ESG in general have played a central role in our company, not only because the fund managers and the institutional investors can play a specific role, but also because long-term infrastructure projects can play even greater role, but also take on even greater responsibility, since they can have important impact on the environment and the society. In our company, there is a dedicated ESG team. Of course, we were very lucky, since one of the partners and leaders of our team has been for many years responsible for investments of APG, which is the biggest Dutch pension fund and a leading organization in the field of ESG. So thanks to him and the dedicated team, we have developed our own framework of sustainability and ESG that aims at two objectives. The first, to reflect and describe the performance of a company in terms of its impact on society, economy, and governance in general, but at the same time to set the basis for the future strategy, so that every investment we make to have an aspect of ESG, but at the same time to set specific objectives and also reach some tangible results. And the second objective that we are trying to reach is the following. In the context of ESG, we want to make analysis that will have specific objectives and strategies. We don't want to speak about all these in theory, but we want to be able to practically measure the results and to monitor the performance in the long term. Thank you very much. So let's start the first round of questions. I would like to start again with Ms. Vrettou. Piraeus Bank provides important incentives for economic competitiveness through the adoption of environmental objectives and principles, as you mentioned earlier. How mature are the Greek companies in terms of the green investments and the ESG criteria? Do you believe that they perceive the green criteria offered by Piraeus Bank in a positive way? And I would like to add, how have they differentiated the products and services in order to improve the environmental resilience of the country and ensure the gradual transition to climate neutrality that we talk about by 2050? I would like to say that the transition to the adoption of ESG principles, and especially those pertaining to climate change, is a journey that requires some time for the companies to familiarize themselves with them. I would say that today the clients are divided into three categories: the big companies that are listed in exchange, like the Athens Exchange Group, and realize the need to make this transition faster. The second category are the big, small, medium enterprises, or the smaller of the big enterprises, the ones in the middle, in other ways, that they are making the transition now. They are getting the necessary information. They're turning to us for guidance, and the economic incentives that we provide through the bank contracts and agreements that we give them allow them to ensure this transition. The third category pertains to very small enterprises, which you have described as the backbone of the Greek economy, which unfortunately perceive all these as something that is not necessary, and they are still very hesitant because they don't know what to expect. I would like to say that it is necessary to acknowledge that the RRF will provide a boost to all these different categories of clients in order for all of us to reach our objectives. I would like to remind you that the RRF is governed by green principles and makes reference to green transition. Moreover, there are green programs like I Save, I Do Business that provides incentives to very small enterprises so that they can develop environmental awareness and adopt some environmentally friendly habits. I would like to tell you that every time that we have funded a sector that is linked with sustainability criteria, and I mean by that RES or even heavy industry, we had received thousands of calls from our customers that wanted to learn more in order to be the next who would get the funding. And I believe that this is something very positive because it shows that people want to learn, they want to develop environmental awareness, and we can actually contribute to that as a bank. Thank you very much. Okay, I would like to give the floor to Ms. Konida. The HSBC Group hopes to facilitate funding by making investments of $750 billion by 2030 in order to support its clients. We know that in order to reduce the greenhouse emissions and in order to reach zero emissions, the private capital flows need to be increased. Moreover, the utilization of new technologies needs to be increased as well. How do you believe HSBC could guide its clients in this transition towards a future of zero emissions, but also accelerate the development of funds that will invest in new technologies that can be used in order to combat climate change? If we take into account the demand and offer for funding, which are the obstacles that currently exist? It is a fact that when it comes to the funding of transition to an economy of low carbon, important funds will be required. Access to these funds, to this capital, will depend on the readiness of the companies to develop strategies and to proceed to their transformation, as is required by the ESG principles. This is also dictated by the fact that the banking institutions and the fund managers require companies to have a specific plan and specific objectives for sustainable growth and to adopt business models that abide by the ESG principles. In HSBC, acknowledging the role that we can play as a major international financial organization and the fact that we can support our clients in their effort to make this transition, we have made a commitment to provide a fund of $750 billion up to $1 trillion in order to fund investments of that kind. At the same time, we are close to our clients and we work together with the specialized group on ESG issues in order to provide advice and directions and guidance for the development of framework, strategies and commitments that can be used in relation to funding tools like the green bonds or the bonds that are the so-called sustainability-linked bonds. When it comes to the green bonds, the companies that issue these bonds are committed to use the funds in order to make green investments in a given period of time. With regard to the sustainability-linked bonds, they commit themselves to reach an index of sustainability, like a reduction of CO2 emissions, as a result of the overall strategy of the company. On the basis of a recent study we conducted in Europe, the overwhelming majority of investors, approximately 90%, perceive important or very important the companies to prepare themselves for the consequences of climate change and to proceed to the necessary changes of their business model. A percentage close to 25% of those investors are willing to disinvest from companies that do not have a reliable transition plan. So for us, it is important to help the companies, the clients of ours, to accelerate the transition plans, but also to set measurable sustainability indexes in order for them to have access to funds that they need so badly. Thank you very much. Mr. Lazaridis. Since 2018, the Athens Exchange Group has taken part in the Athens Initiative for Sustainable Exchange Groups that promotes the best practices for the integration of non-financial information and data for the promotion of green investments. The initiative of the Exchange Group to issue a guide for the incorporation of non-financial information constitutes a step towards the enhancement of practices for the disclosure of ESG practices from companies. What have been the developments in terms of all these during the last 3 years? In my view and based on my experience, the response of the companies to the ESG rationale is impressive. I would like to mention that when we started in 2018, which was the first year, 49% of the listed companies out of the 161, that is, the 49% had submitted ESG data according to the guide. Then in 2019, the percentage rose to 60%, and for this year, for the year 2020, the percentage is 71%, which is a quite encouraging percentage. Equally important is the fact that 100% of the listed companies of the sectors that we monitor has ESG information and data and provide this information and data to the investors. None of the 18 sectors that we monitor has less than 50% participation of the companies. I would like to tell you that we have telecommunications, public utilities, insurance, energy, personal care and medicines that take part 100%, whereas the minority of sectors has over 75% of participation. Now, allow me to mention so that you can all understand the sizes. As the president of the Association of Institutional Investors said 1 month ago in Salonika, in 2018, we were the first to start with 500 billion capital under management. And in the third quarter of 2021, we have exceeded 3.5 billion. As you know, ESG covers 3 different sectors: environmental, social, and governance. Governance attracts the greatest participation of companies in terms of disclosure, and then comes environmental, and then social. Moreover, I would like to say, and it is very important, that in Europe, the funds that can be found in the European Union are 10 times more compared to the American ones, which are 5 times more compared to the Asian ones, in order for you to understand the different sizes. So the European far greater than the American ones. Yes, okay. Ms. Farmaki Teresa, with ESG criteria playing a central role in business agenda and also given the results and findings of the COP26 summit, how do you believe that the business community approaches ESG principles, and which are the trends that prevail in the asset managers? I would like to start by making an observation, which is also linked with what the previous speaker said. It is extremely encouraging and optimistic, the fact that the community of institutional investors has quickly proceeded to adopting the ESG framework. If there is one good thing that came out of the pandemic, is this new, very strong awareness shown by private entities and their willingness to take part in this journey of sustainability. Now, with regard to the trends, the first thing I would like to say, and I believe that this is very important when it comes to ESG, is that it has become widely accepted the fact that the ESG framework and the harmonization with the ESG criteria do not require financial sacrifice. On the contrary, they are a source of added value. And this is a major change in the ESG world because all of a sudden, the private sector has now access to institutional investors. Now, before I talk about the second trend, allow me to explain what I mean by source of added value. This is linked to two things I would like to mention. The ESG framework, with all the benefits that it offers, allows a better risk management. Traditionally speaking, when it comes to investment analysis, as well as taxation analysis, ESG contributes to reaching this objective, that is, ensuring better risk management and anticipating possible mistakes. The fines that are imposed on pollutants, on negative consequences on the environment and the wider society are known to everyone. The fines are huge. So we're no longer talking about a choice. Adopting ESG criteria and abiding by the ESG framework is an effective tool to minimize damages and to ensure added value. The second thing is that the consumers and the contracting parties in different sectors of the market understand that there can be added value for goods and services by adopting ESG criteria. We have seen that, especially when it comes to consumers' products, where the price that the consumers are willing to pay for biological products, for example, or for products that they think are environmentally friendly and sustainable, is high. In other words, consumers are willing to pay higher prices for this type of products. And generally speaking, ESG has been acknowledged as something that can ensure added value. And now allow me to talk about the second trend. The private sector has taken on an unprecedented role in the ESG context. A few years ago, We believed that talking about sustainability and adopting sustainability principles was something that was dictated by central institutions, environmental organizations. Now, on the contrary, since everyone has realized the value of ESG criteria, the profit that we can get by adopting them, we are willing to use it more easily. And I'm talking about everyone, private entities, investors, everyone. You talked about COP26. I had the luck and the honor of being invited as a speaker in COP26. And regardless of the comments that were made about its usefulness or its results, the impressive thing was the participation of the private sector in such an event, in such a summit. There were representatives of private investors and fund managers who in the past were not present in events like COP26, and now they were. And the third trend I would like to talk about is a global trend, actually. It is, we could say, a challenge. We're talking about the greenwashing. Along with this discussion that is taking place about ESG, there are many companies and institutions that are wondering whether all this discussion is sincere, if all the interested parties are transparent, honest, or maybe they are using ESG as a pretext or for communication purposes. So the third trend I would like to mention is that most interested parties are now decided and determined to learn about details. They want to have detailed business plans and learn about initiatives that can lead to results.
Let me now move on to a second question to Mrs. Vrettou. Eleni, quite recently, Piraeus Bank completed its open book process for 500 million euros. The coupon was 8.35, and that attracted great interest on behalf of institutional investors. So would you like to tell us more about this green bond on behalf of the bank and what's in stock in the pipeline for the bank? Let me start by saying that green bonds is an amazing opportunity both for investors and for issuers in order to promote sustainable and healthy growth. What started as a pilot issuance in 2017 by EIB, the first ever green bond, now is an institution. It's a paradigm, and we see Greek banks, Greek companies adopting this approach because it is a need for investors to turn or to shift their funds to placements where there's a positive environmental impact. The European Central Bank issued green bonds of 14 billion euros and this has been covered 11 times. So international demand will exceed 1 trillion euros by the end of this year. So we're talking about a market so deep that no issuer may ignore. The recent bond by the Piraeus Bank was a very successful one, highly interesting to investors as it was shown by the orders that exceeded 850 million euros, more than 800 investors, if we heard correctly. And this is a new incentive for us in order to complement our climate strategy. A main pillar of our strategy is, apart from the green bond, is to emphasize on green funding so that we play a role in achieving the net zero target by 2030 and decarbonization of our country. Let me say that Piraeus Bank is the undisputed leader in financing renewable projects, having already financed 40% of installed capacity in our country, an entire portfolio that amounts to 3 billion euros. This doesn't take into account those investments which are at a contractual level and no money has been disbursed yet. Renewables, the industry of renewables will be further enhanced because we have 7.2 gigawatts in the pipeline thanks to the RF funds, and we need new arrangements, institutional arrangements, if you like, because we have at hand the energy storage concept. Apart from that, we aim at decisively and steadily decrease the environmental footprint we have as a bank because of operations using clear, quantifiable objectives with respect to energy consumption, materials we use, energy sufficiency of the bank, and want to identify new products, new services that we will propose to our customers, such as plastic phase out, best use of water, water management, and as a result, reduce our overall environmental footprint across our economy and society. Alexandra, financial markets and capital markets have to deal with introduction of ESG, and this means a huge shock for them. What's the main instructive by financial institutions to the investors and vice versa? And what are the challenges, and how well are companies prepared to make sure that the ESG transition is a successful one in order to meet the expectations of investors? Indeed, as a result of the pandemic was something like a catalyst, an accelerator, and capital markets have a strong momentum, and they're turning their eye to issuing ESG labeled bonds, green bonds or sustainability linked bonds. According to an HSBC survey, the driver of this shift is that more than 60% of investors and issuers have reviewed the way they understand their responsibility vis-à-vis the society, and Mrs. Farmaki mentioned that before. So they are much more conscious on the positive impact they should have on fighting climate change. According to the survey, more than 50% of them believe that by emphasizing on ESG, on environmental and social issues, increases their return and mitigates the risk they undertake. So we're talking about multiple benefits for the investors and the issuers. As Mr. Lazaridis said, Europe is at the forefront of issuing green bonds or sustainability-linked bonds. 25% of all corporate bonds of 2021 being issued with some kind of ESG labeling compared to 10% in 2020. So this market indeed is growing at an exponential rate. The largest part of these issuances had to do with green bonds. So issuing sustainability-linked bonds took off in 2020, actually, and the rise was significant. The true advantage of these bonds is that compared to green bonds, they have no limitation with respect to how the funds may be used. So the money may be used for reducing CO2 emissions or greenhouse emissions to a wider range of companies and industries compared to green bonds. And they also tackle to a certain extent the concern of some investors, potentially, for greenwashing, as mentioned before, because they link funding with a holistic approach of the company vis-à-vis the reduction of the CO2 footprint. For 2022, we expect that the market of sustainability-linked bonds or green bonds will rise by 50%, given the interest by issuers and investors, and the market will amount to $1.5 trillion. Now, Greece. There is a strong interest, and we have seen already issuing of bonds by Greek banks and corporates. The energy transition is one of the strategic pillars of growth in our country, and significant funds are needed in order to finance this transition. Important investments are in the pipeline and will have to be implemented in circular economy, renewables, clean technologies, green infrastructure, digitalization by companies of both the private and the public sector. HSBC, as I said before, in the past 12 months, we've seen the important issuing of bonds by Greek banks and corporations. So we have been leading this process of issuing bonds, helping companies to create the framework for such issuance. These frameworks actually describe corporate strategies and the objectives set, the way they are disclosed and the way they are to be met, and as a consequence, they are assessed by third parties, independent third parties, in order to provide investors with the necessary comfort on the reliability of this data and the compliance with international standards as stipulated vis-à-vis the UN Sustainability Development Goals and other International Capital Market Association authorities. So at this very point, let me close by saying that there has been a very important transaction that took place in Greece. We're talking about the bond, the sustainability-linked bond of the PPC, the Public Power Corporation, a transaction linked to the CO2, to the greenhouse emissions reduction and the huge decarbonization program of the company. The first transaction reached 650 million euros. After we have had another two after that, and as a result, PPC raised a record amount of funds, 1.3 trillion euros, showing the depth of this market and the prospects for raising funds for companies which are about to embark in this beautiful journey, as Eleni said, to the introduction of ESG standards. Now, that was clear. Now, Socrates, Lazaridis, the exchange, the Athens exchange, announced the Athens exchange, energy exchange index. Would you like to present to us the contribution of this new index to the Greek economy and how listed companies have welcomed this new index ahead of a potential upgrade of the index, and what has been the feedback, positive, negative, by the Greek market?
Well, the companies that are listed and those that are sensitive towards ESG and under the fear of greenwashing, which as mentioned by Madam Farmaki, is ever increasing. Obviously, market regulators are under pressure both to demonstrate but also protect their fame and brand through the mechanisms they implement, because on one hand, you cannot use the potential investors, but on the other hand also, you must have a very stable basis. Given the funds in Europe, as mentioned before, huge effort is made at European level to introduce regulations on the matter. But as it always happens, in Europe, these things demand knowledge and experience to get mature, and the investment public cannot catch up. Therefore, we created a network that tries to demonstrate the value of disclosure, not of the assessment per se. We haven't reached those levels as yet of data management so as to have such kind of assessment. So we try to press the companies to make a disclosure, because following the disclosure, we can have a more serious assessment. So we launched this index in July with 35 participating companies, having in mind to exert pressure companies on ESG disclosure in 2020. And in the recent review that has taken place a couple of weeks ago, we had an increase of participating companies up to 49. And hence, we had an increase of the average noting, which is based, as I told you, on the size, that is, on the extent of disclosure, not on quantitative criteria. From 0.45 that we had out of 1, now we have reached 0.7 out of 1, which is an important increase and a great improvement, without, of course, underestimating the importance of qualitative assessment, which is the next step we want to move to. And this is one of the parts of criticism that we deal worldwide with this overall process of ESG disclosure, because different providers give different notes, and people expect to have your industry developed and acquire the competencies that could be easily and an interesting price to assess the disclosure of the listed companies, because they must be effective as well in the process. Yes, I got the hint. Point taken, Mr. Lazaridis. Thank you. But it's true that as far as we are concerned, the houses, the auditing houses, make a great effort to have that know-how so as to really be able to read and set aside the issue of greenwashing, and they can substantially help in due course. Let us proceed to Teresa. Within 2021, Astarte undertook many initiatives vis-à-vis forest management and the initiative of Forestry Fund. Could you please describe in a couple of words the goals of this project? At the same time, the European Union committed itself to invest 1 billion euros in protecting forests worldwide. Why do you believe such a big fund has been earmarked for this reason? Thanks for the opportunity to develop my favorite subject, forests. Starting from this specific investment that you mentioned, Dimitris, this investment has a very particular, a special place in our portfolio, and is also our point of great attention. It is an investment scheme that we have created along with a Swedish group specialized in managing sustainable forests. We jointly manage and develop forests on the terms of sustainability in Latin America, with a view to both having a commercial management and therefore profits to be drawn from the wood product trade, but also attaining important environmental and social benefits in this field. I should say that with regard to the last part, this area is indeed, that is Latin America, a specific country, which is Paraguay, is a rapidly developing market, greatly affected, as most such countries and markets, by the lack of jobs, unemployment, very low income per capita, and therefore the specific investment we can offer to our investors important profits and yields that can be drawn due to the disadvantages of the area in the field of wood, but also we offer economic activity and investment, important size of investment in much needing society. In extenso, therefore, the remaining question is why the European Union has earmarked such a big fund for the protection of forests. Let me start with a very brief introduction for those of you who haven't read or known, which is the role of forests in this new economy, new society we are living in, and which demonstrates the need to deal with the climate change and the net zero goal. We may perhaps all have seen the well-known graph showing that in order to attain the goals of net zero, large part that has to be affected is the reduction of CO2 emissions and digitization of productive processes, but this doesn't suffice. We also need net absorption of CO2 from the atmosphere, and the forests play a unique role in that, because through photosynthesis, a natural way that is, forests absorb CO2 and store it in their biomass, in their trunk. This makes them the most effective technology for absorption of CO2, and it can be effected in a very large scale. This, therefore, makes forests acquiring a brand new role, which was not fully acknowledged through time. This is a huge source that can decisively contribute to reaching the zero CO2 emissions. Therefore, in this part of protecting forests, there are two major initiatives. The one is protection against deforestation, which, as we all know, is a huge plight of our world. And the second is the development of new forests, so as to contribute to the creation of new forests, an additional source of absorbing CO2. So this is the direction of the European Commission that led to earmarking 1 billion euros towards this action. And I believe that we will see them all absorbed there. Protection against deforestation and developing new forests. With regard to deforestation, I believe this statistics is really dramatic. If the deforestation was expressed in country, it would be the third biggest country in CO2 emissions worldwide. This demonstrates how huge the problem is, and the need to deal with it is critical. The second part on the generation of new forests, showing perhaps the paradigm of our investment, which is based on the same principles, by investing in new forests that both have the environmental and social benefits, but also could be managed commercially and therefore offer some movement in the broader economy. One can thus contribute in dealing a major problem in developing countries, how we will be able to help them to be developed. Forests, soil is one of the very few assets that many of these countries have. Therefore, forests can also play a special role in this field. Thank you. It seems that the subject is extremely interesting, and perhaps we took more time than the one allocated to us. We only have 3 minutes at our disposal. So, Piraeus Bank, what is your action plan? I don't know whether within 1 minute you can encapsulate that vis-à-vis the environmental and social risks. Well, as I said, this is part of our function already, so we have changed the whole structure. We have introduced an institutional framework with committees monitoring how we assess our portfolio, our strategy. The executive committee and BOD supervise all this so as to transform our words into deeds. So we'll be always the pioneers in this field, not because it is something of an obligation, but because we have no other choice for the planet and what we have to bequeath to next generations. This is how we have to view it, not as an obligation, but as a will and desire. Now, Alexandra, COP26, couple of thoughts? COP26, some progress was registered, but definitely did not satisfy our expectations for far more ambitious commitments that might accelerate the dealing of climate change. We want to reach a drop by 1.5% of the global temperature. I don't know whether we see it. Now, there's also something important, the Glasgow Financial Alliance for Net Zero, a cooperation between 350 companies from 26 countries. HSBC is among the founding members, and committed for 1 trillion of private equity to be earmarked for the funding of economy towards the green transition. I believe this is extremely ambitious, and within the next 3 decades will contribute towards that. Thank you, Alexandra. Socrates, the Athens Stock Exchange has done enough things, has shaped the guide, and has helped, and I was impressed with this 71% participation adoption. Which other initiatives do you feel like undertaking? We are going along 2 dimensions. The one is the one that was mentioned. Many stock exchanges have fully exploited the Sigma initiative. ICMA is the Association of Investment Bankers in Europe, the market participants, if you like, so as to establish, to create the guidelines or principles for the issuance of green bonds. What we now prepare for discussion on December 15 is the respective communication policy that the stock exchange will undertake, so as for an investor to find all necessary data at one point from all the protocols. This is important, bearing in mind that today we had the introduction of all properties of the bond, which was the 3rd green bond issued in the Greek stock exchange. So the market moves ahead far quicker than what we can cover. always under the fear that we must be very serious in the framework that we set. The second important part investors can make their own assessment because according to the European regulatory framework, institutional investors must make also their own assessments and audits beyond the other organizations and agencies offering information. Thank you. Now, very quickly to Teresa at the end, dulcis in fundum, you know the data in the market. What should one tell to the potential investors who have not yet integrated ESG criteria in their portfolio? I'll touch upon what Eleni just said. ESG is not an obligation. It's a motivation. It's a moving power. It's a reality. It's the only way that companies will be able to survive, adapt, and succeed competitively in their sector. It's not an additional cost. They shouldn't view it like that. The quicker they adopt it, the quicker they will be able to pursue their successful course and thrive. Thank you. I believe that we can close with that, a very positive message from ESG. From the guideline issued by the Athens Stock Exchange, many companies have already started to adopt it, and this can offer a lot to SMEs as well. Let us hope that we all adopt it. The sooner the better. We warmly thank you all.